Hey, Dustin Tibbetts with Passport to Wall Street, and today is the stock pick of the week. We're going to go through an interesting stock pick on an interesting couple of days here in the stock market, and to make it to help you focus, we're going to go into the tech sector. We're going to look at a symbol called AKAM Technologies, symbol AKAM. Let me go over to the charts here. Here's a daily chart of AKAM, and I'll zoom in a little bit just so you can kind of see what's happened over the last few days. The stock has sort of fallen off of a cliff. And actually, if we go through and we take a look just from this most recent moment where it broke through the 200-day moving average, AKAM is down by about 10% just in the last, 4 days actually. So very interesting move here on them. And what I always like to do with these is see, could I go sell something really cheap as an option? And maybe just kind of go way out of the money, have a higher odds probability of making a little bit of money, and just kind of add it to the pile of things. So what I thought is I'd see if it fell 10%, what happens if it fell another 10%? We'd be down kind of around $60, give or take, depending on where it opens tomorrow. So I thought, all right, a 20% decline, I'd be willing to participate at that point. Think of how far the stock would have to fall. So if we go over to the option chain, we look in November, just using the monthly expiration, you find that at $60, right, which is right here, and $60 on the chart marks the 20% decline mark, well, since it broke the 200-day moving average, you look at that and you go, how much can I get for that? Well, it looks like you could get, it's a little messed up at the moment, but it looks like you get about $1.10, $1.20 in there. And so even if you got $1 for that, you'd have a break even of 59, which would be over 20% decline. And if we just kind of look over here, it's harder to see, but you have a 20% probability of the stock going all the way down to $60. So if you're going to collect $1, let's just say it's $1, and you have a 20% chance that you're going to get in some trouble, that's a fair trade, right? That's better than buying the stock or shorting it or even buying it from here. That's better odds. So the trade of the week is actually, you don't have to go to 60 if you don't want to. It's just, this is far out of the money. Go to the $60 strike price in November, which is all the way down here, 43 days left, 42 days left really. Look for the $60 put to sell that for $1. If you can get more, try higher first, but if you can't get more, then go with $1, and that's not bad. You could also go closer, bring your odds down just a little bit, but still get possibly $1.75, $1.85. So the $60 put, $62.50 put, anything in there that you want to sell, that is the trade of the week. Really simple trade to explain. You're selling puts. You have the potential of getting assigned stock at that strike price, but remember you collect a credit. So in our example, if we sell at sell a $50 put for $1, our break even's 59, and so that's really the trouble spot. It just doesn't seem like that's going to go down there. Even if it falls for another couple days, we'd still be in good shape. As far as profit taking, you could look to sell it when you get about half of the profit. If you want to squeeze it for a little bit more, that's okay as well. It really depends on what happens from here. If it starts to bounce from here, then yeah, squeeze it for as much as you can possibly get. That's the trade of the week. I hope you enjoy. I hope it makes you a profit, and we'll talk to you soon.